So welcome to the show, everyone. And as all of you know, I made it possible for everybody to talk about themselves on the radio. And if you want to get yourself heard on Networking Arizona, just give us a call here at the station. Get connected with me, and I'll get you on Networking Arizona. Just call 602-277-5369. I'm going in right away with my first guest who's been on this show many, many times. I love having him on. We were just talking before he came on that my eyes always become saucers when he comes on, and it's so true. I have with me now David Fisher. He's the CEO of Landmark Capital. Welcome back to the show. And what are we going to be talking about today, David?
Well, I don't have to talk about myself, do I, this time, or do the lead-in? They all
It's
know
up to
me
you.
by
You know,
now.
they're getting to know you.
Okay. Well, just
But you can kind of tell them a little
Okay,
bit. There was always new listeners.
I just started last week. I don't know nothing, nothing about nothing.
How long have you been doing this?
23 years.
Wow.
In the precious metal industry, but mostly I study economics. That's really what drives the market, and fundamentals, technicals, but more so fundamentals. And we had incredible fundamentals happening this last week, just a few days ago on Friday, with Britain exiting the Euro system, or at least announcing that they're going to. They haven't officially done it yet. That's a whole other story. But that sent shockwaves to the markets. The Dow plummeted 620 plus points. In fact, all the major asset classes went down, except for two. The dollar went up 2.5%, the index of the dollar, and gold shot up 5%, which those two things tell us this. When the dollar goes up a big percentage in one day, that says we're going to have a short-term problem in the global economy. When gold shoots up 5% like that in one day, it tells us we have some long-term problems that are going to come to the forefront for the next 2 to 5 years. So this is a major indicator that we're going to have some problems. It confirms everything we've been talking about, that we're headed towards a recession. And this was not good news for a lot of the banking industry, because here's how the bank stocks affected. We had a double-digit loss on Friday in most bank stocks. We had single losses yesterday, 7-8%. We're talking almost a 20% loss. It's up about 2% today in the banking sector. So we're net 18% loss in 17, 18, 19% loss in the banking sector. And to put it into perspective, there's a U.S. bank indicator that is used called the KBW. That is the index that is down 25% in the banking in U.S. banks for the last year. And in the European, it's called the STOXX, and that is at now pre-2008 levels. So they really are getting hit hard in the European banks. In fact, they really never recovered from a recession. Europe has not done that. So that's one of the reasons why their banks' stocks are down substantially. So we're having some severe problems, and Britain got downgraded by Standard & Poor's credit rating from AAA, which is what the United States used to be before 2012, that we got downgraded to AA+, but Britain went a full point from AAA to AA. So we're having some financial problems going on in the world, to say the least.
Really? I mean, well, one of the things that you said, and I'm just going to ask you this. I know it's not
Ask
a
away.
question. I have to.
Any question.
Okay. Because I always talk as if I'm a listener, because I am one of them.
Yes.
And I'm listening to you, and then one of the things that you said is about how Europe has never really recovered from their
From the crisis
crashes.
of 2008, yeah.
Have we?
No. But, but we got more lipstick we put on our pig that says we have. So it's a media propaganda. I'm not against media. We're in a media room today. But we're telling the other side of the story, that most Americans haven't recovered. And you know what's happening? There's a disconnect. That what Britain is a signal of the people that voted. It was a 52 to 48% vote to exit the euro. That's what the vote was. About 72% of the people showed up. They're actually calling for what you call a revote, because they didn't meet the criteria of it going fully through. I don't know if they're going to get the revote, but the criteria was they had to have over 60% difference, and it wasn't 52 to 48, and you had to have at least 75% turnout, and they only had 72%. So now they're talking about rehashing that, and this is coming from the political side of the agenda to stay in. But here's what the key is. Most of the people that voted are the people that love that country for a long period of time, the people of our age bracket and older. They saw what it was like when Britain was a free, independent country. They saw the change on all the promises that were made to them by politicians and the leaders of the EU saying, wages are going to go up, cost of living is going to go down, how health will be incredible, you're going to have this incredible healthcare system, and all those promises fell on deaf ears, and it actually did the opposite. So the people are saying, I don't believe what you're saying anymore, politicians. We're taking our country back, and that's what really this is all about. We're seeing the same thing in the United States. People are upset with what our leaders are saying, and so they're putting on more lipstick, and we're taking it off, and we're saying, no, let's get back to the reality, get the debt under control, because we're in a global debt. I mean, look what has happened in the last 7-8 years. The debt is ballooned. We were at $10 trillion in debt when President Obama got in office. He'll leave, 20 to 21 trillion. Britain's no different. Most of the countries of the world, they have a high debt structure, and they're trying to fix this thing by printing more money and lowering interest rates to negative.
Well, what I like to do too is open up the lines to the audience for anyone that wants to chime in too about what they feel about all this. But also, for you, one of the things that we are here for too, though, is for you to educate them on what your company can do to help us out there to protect ourselves.
You're exactly right. Because, people are probably saying, oh, that's all good and fine, David, but how does that affect me? Here's how. We live in a global economy. What happened in the United States that with 2008 with Lehman Brothers affected the whole world? What has affected Britain has affected the whole world. Let's just go back in time. We were having severe problems as the aftermath of what China was dealing with just back in August, right? The Dow was 18,000 points, and it came down 1,500 to 2,000 points. Did that not affect us? Of course it affected people, lost money in the stock market. Then it recovered. Then the Fed announced in December 18th that they're going to raise the interest rate a quarter of a point. And what happened? The Dow came down in a couple of weeks, 1,500 to 2,000 points.
Right.
We're seeing the same thing right now. So this does affect us, but here's the severity of this. Once they induce what you call Article 50, which is the clear written announcement from Britain giving it to the EU, saying we are really leaving the EU. It's going to take 2 years. 2 years to fully unwind this thing, and this is why they're calling for a major recession in 2 years. So the world is headed into a recession. We're just not admitting it yet. In fact, the day that Yellen raised rates was the day that the most major leading indicator of recession that has been used the longest and been the most accurate is the industrial output production. It went negative, which means we're headed towards recession. And yet they said on that day, Yellen did, the economy's recovering. The indicators are saying we're going towards recession. People don't want to hear it. I know you don't want to hear what I'm saying with my voice today, but it's the reality. Just wake up and see we're headed that direction. So what happened in the recession? Stocks went down 35, 40%. Real estate went down. I don't see that happening so much this time because we've learned from leveraged assets. And gold went up 72% because of massive uncertainty the first year and went on a multi-year bull market run. So we're getting ready for some sort of repetition, maybe not as close to the timeline of it being triggered by a one-day event, but we'll get to talking about after the break what's going to happen with one of the banks, and you'll see the system and the history possibly repeat itself.
Now, his website is landmarkgold.com. His phone number is 602-287-9200. We have our lines open here. You can call in and ask questions, but also, I also want you to tell them a little bit before we go to the break about the way that they can, protect themselves at what you've created at your company.
Well, there's a legal way that you can roll over your IRA, 401k, in retirement into physical gold and silver and take possession of it. A lot of people don't understand how that's being done, and since they don't understand, they say it can't be done, but it is being done, and there is a legal methodology for it to being done, and it's been put together by one of the lawyers here in the Valley. I've used him for 6 years. Just to clarify, he doesn't work for me. I don't get any kickbacks or any of that. He's never bought me a drink, dinner, lunch, nothing, and that's why I want to keep it. He has just figured out how to facilitate this, and so he puts together the legal side of this. The cost is very cost effective compared to most companies. My competitors I've looked into are somewhere between $9.95 to $19.95 in their legal fees, and he's $350 for in-state, $385 for out-of-state. So if you're out-of-state and listening to this program on a podcast or a replay, you can do this through our company, whatever state you are in the United States, and we have a lot of clients in almost every state here.
And what we want to do is we're going to open it up to the lines to the audience for everyone to call in. We've got the information. You've got a white paper that you've written. It's about the coming bail-in, and we'll talk a little bit about that too. And your IRA, having physical metals and taking possession with no tax liability, we want you to have the information on it. Give us a call here at 602-277-5369. Toll free, it's 1-866-536-1100. Check them out. It's landmarkgold.com. So welcome back. We're talking with David Fisher. He's the CEO of Landmark Capital, and you're here because there's so many things that are going on in our world today that affect us, and you really want to help. You're here to educate the public. That's why you come on this show. You want to help them so we know what to do, or we should hear what you have to say, what you think people could do. And we want to open up our lines to the audience for everyone to get. He's written a white paper. We want to talk about that real quickly before we talk about anything else.
I have a couple white papers. One is on how to roll over your IRA or 401k into physical precious metals and take possession of those metals without a tax liability. It's easy steps, 1, 2, 3. We go over how easy that is. The other white paper is now, your white paper says it's the 4th edition. We're coming out with a 5th edition now.
Wow.
So it's just
you
being
have
sent
to. So much is going on.
I'm just put in the 5th edition. What I'm going to talk about today, we're going to talk about a milepost that I'm seeing in our country that happened today. My eyes got big when I heard this on financial news. But anyway, the white paper talks about how our country is preparing and following in the same footprints and blueprint that the foreign countries in Europe have done, where they've seized their citizens' assets, their bank accounts, their pensions, their retirements, to shore up the economic turmoil of lack of financial transparency and being able to fix the debt structure of their country. So they went inside their citizens' assets and took them.
Well, we don't want that to happen. We want you to learn, if that does happen, about it and what to do to not let that to affect you. So you've written these white papers. We want you to have the information, and we want you to call in for it at 602-277-5369. Toll free, it's 1-866-536-1100. Everyone is just going to get this information, read it, see what you think about it, and you can also call him direct. They do free consultations with everyone at 602-287-9200. It's landmarkgold.com, or call in here. You can even chime in if you want to at 602-277-5369. I'm getting so excited I'm spinning. It's funny.
I had to wipe my face for a second. No.
It's true. Now, we were talking at the break, and I just wanted to know that what does the Fed and what Janet Yellen, what they say, affect us? How does that affect us, David?
Well, I was sitting in my home listening to this last week, and my eyes got so big. What I'm going to say, you'll be shocked too. I did a little research, and I not only found it just this last week, I found it that she was before the same Senate Banking Committee last year saying the same thing, being asked the same question, and the year before. So you'd think that this is, if it's happening now 3 times, that's a pretty important point. And here's the problem. There's a thing called living wills. If you passed away, you probably have a will on what do you do with your assets, okay? Banks are now required to have a living will according to the Dodd-Frank Act. So in other words, what happens if they can't facilitate their debt structure and they're in trouble and they're going out of business, they have to unwind? Well, what happened with Lehman? So here's what was said. Just recently, 5 of the largest U.S. banks have received failing grades by the FDIC and the Federal Reserve in their living will. Not a B minus, not a C, not a D, an F. 5 of the largest banks, and they are Bank of America, Bank of New York Mellon, J.P. Morgan Bank, recognize these names?
I'm saying, wow.
State Street, and Wells Fargo.
Wow.
Those 5 largest of the 8 largest banks in the United States, according to the Federal Reserve and the FDIC, have failed the living will test, which is when you need to unravel, how do you do this? They failed 3 years in a row.
I'm almost in shock. I don't even
Listen,
know what to say.
you think you're shocked now? Listen to this. In the event of a crisis, the bank would cause a severe downturn in the economy. I'm reading this verbatim. I typed the quote, okay? 3 years in a row, same quote. And make the U.S. taxpayer pay for the bailout of
my
these
God.
banks.
Wow.
Did you hear what I said? That was before Congress. They're saying that we, the taxpayer, would be required to pay for the bailout. I've been talking about this, haven't I?
Absolutely.
This
I'm
is
like
the bailing.
saying
So when
it's happening.
So when people say, "Oh, I don't know, come on, that's conspiratorial," really? The government is saying the taxpayer will pay for the bailout of these banks.
And that's us, you guys. I have Kelly on the line, and she just wants to ask you a question. And I'm not sure what it is, and if you'll be able to answer it fully. But Kelly, you're on the air. What's your question? Okay. Hold on tight with that. Hold on. You can't say hold on tight. Go ahead. Hold on, Kelly. Hold on.
So here's what I do know, Kelly. There is a lot of things that are being said and done behind the scenes, and I can't confirm that, but what I can say is France has talked about now wanting to get out, and Holland is one of those countries that will probably vote to get out. Behind them is Austria, and Germany will be left holding the bag financially. So there, if you start putting those pieces of the puzzle, that would confirm at least what you're saying and what you're hearing, and I can't verify that as mainstream media or any media source is saying that, but what I do know is we're going to have severe problems ahead. Back to what I was talking about, though. Thank you for calling, Kelly.
Yeah,
If you
and
wanna
we'll get you
talk more,
connected with him after the show. Go ahead.
I'd like to hear more about that, Kelly. Call me in my office, and I'd like to hear a little bit more what you found out. So here's what they found, what they're comparing this to. They went on and saying, in 2008, let me remind you, Lehman Brothers brought down the system. They had $639 billion in assets, 209 subsidiaries, and $35 trillion in derivatives. Just one of these 5 banks I listed, let's use one as an example, JP Morgan, $2.5 trillion in assets, 3,391 subsidiaries, so 209 is what Lehman had. They couldn't unwind the 209 subsidiaries. It took them 2 years to get out of bankruptcy. They're not going to be able to unwind JP Morgan if they get in trouble with 3,391 subsidiaries. And their derivative risk is 2.5 times larger than Lehman, which is 75 trillion, which is roughly the whole global economy output.
So that
So
means
when we say, everything's all fine, the banks have money, okay, well, the bank stocks keep falling 12% this month, 5% next month, and they got to buy back the stock. They're not going to have money to buy in a case of a crisis. In fact, that might create the crisis. All we have to do, if these banks bet that Britain was going to stay in, they bet leveraged money that they were going to stay in, and they didn't, they lost that trade, didn't they?
yeah, but can you do me a favor and tell me, do you think that when you come on here, I always wonder how long do we have to go before, you know, the hatchet goes down?
I don't know if there is going to be a hatchet, like a one-day hatchet, but we're going to go into an environment where if we don't start taking care of these simple fundamental issues, where you can't leverage money and get away with it because it's going to come back to bite us.
So the point is that we need to take control of our own
Exactly.
world and our own finances and not.
Yeah, the Fed's not even coming down, and that was the next part. The Fed's not even coming down on these 5 banks. They're supposed to, by law, impose sanctions 3 years ago. Not one sanction has been put into place on all these 5 failing banks. Not one. They're supposed to have that done already. So it's like, look the other way. So what is with this? Is the 5 banks, either they don't care and are ignoring it and say there won't be any ramifications, or maybe they can't do it.
Right.
This is a bigger problem.
Well, this is why they do that. They can't, that's why they can't do it, because that's the reason, because they're turning their heads and they're putting their heads in the ground, just like we as people do when we're in trouble.
And that's when people said it won't happen. It happened in 2008, and people need to prepare.
And here's what we've got. We want you to call throughout the rest of the show is also for this. So we want you to get the Coming Bail-In. It's his white paper that he wrote just for everybody to get this information. Also, your IRA, having physical metal and taking possession with no tax liabilities. He's made it very affordable for everybody. Our number here is 602-277-5369. Toll free, it's 1-866-536-1100.